Thank you for joining me today. I very much appreciate that. How are you today?
I'm really well, thank you. Yeah, enjoying homeschooling.
Are you actually enjoying homeschooling?
Well, it's a challenge. I'm glad I've got through the day.
Yes, you've made it through. Congratulations.
Thank you. Thank you.
So Alice, for those that are going to be watching this and they don't know who you are, do you want to just explain a little bit about what you do?
Yes, so I help clients access bridging loans, which are really short-term loans secured against property, which can be in the form of helping you to purchase or even used for development finance. I work with challenger banks, alternative lenders, and private lenders.
Thank you. Do you know what? I'm really glad we're making this video actually, because bridging, I must admit, does really scare me. I'm like, I don't know, I'm comfortable with the money that I've got, and mortgages, I feel like with most people, mortgages people understand because many people will get a mortgage, but bridging is not the same. Can you explain what the difference is between a mortgage and a bridge?
Well, yeah, okay. So a mortgage is a long-term loan. So your interest rates are going to be less than a bridging loan against a short amount of time. And if you're talking about long-term loans, as in mortgages for buy-to-lets or investments for investment purposes, then they're stress tested in a certain way for you to take on that, which you've got yourself a buy to let already, haven't you?
Yeah, I did. Yeah, I bought that with a mortgage. Yeah, I had to put down 25%. Would you say that that is generally how much you have to put down at the moment for a mortgage on a buy to let?
Yeah, typically they're up to 75% at the moment. Long-term mortgages I can help with, but it's not really my speciality. So I'm more up to date with the bridging products that are out there.
Yeah.
However, I do work with an FCA registered organisation that have access to the whole of the market for long term mortgages.
Cool. So on the terms of bridging then, so what do I want to ask? Okay, so say I find a property,
Yeah.
yeah, and I know that I can buy it cheaper than it's worth. I know this is a common question people have. Can you buy a property on a bridge and remortgage it the same day at the new value? If it's not really a new, if you haven't done anything to it, but it's worth more, is it possible to do that or not?
Well, okay, so I think I understand the question as in you want to buy something that's below market value,
Mhm.
and then you want to be able to refinance, you want to take a mortgage out on actually its open market value
Yeah, that's correct. Is that
on
possible?
the same day.
I was said the next day, but same day. Is it possible? I feel like these things are talked about, but they're a bit mysterious. So I wanted to ask you if it's actually possible.
Well, what lenders like to do really, if you're going to be remortgaging it on the open market value or the done up value, uh, mortgage lenders really are more comfortable with waiting for you to have that property for at least 6 months
Mhm.
before you refinance that onto the higher amount.
Okay.
Uh, so the so I think what you're wanting for me to explain is taking advantage of buying at a low price and then benefiting from actually what it's worth.
Yeah.
So that's when we do use bridging, or clients do use bridging to uh, purchase it at that actual purchase price, and then wait wait a few months to then refinance it and make some money. So, you know, for example, you could buy it at 100,000,
Mm-hmm.
do some works to it, and it's worth 175,000, and you go to refinance that in 6 months' time. You can refinance earlier, but you would be your products, you would have less opportunity of the whole of the market.
And am I correct in thinking that sometimes you can get a bridge and a mortgage package all in one? So the bridging company might agree what the end value will be at the beginning, and because that would make me feel more secure about going into one. Is that true?
So whenever you're taking out a bridging loan and you're going to be doing something with it to improve its value, which is probably the reason why you're taking out a bridge, or one of the reasons, is that I forgot the question. You have to edit that out.
I'm not sitting out because this is real. This is what people like to see. Right, okay. I forgot the question too.
I've remembered it. So, so typically, a lender goes in. You would put your offer in, and then you come to me and you say, Alice, I'm putting an offer for a property. I would like to. I'd like to get a bridging loan, please. So we go out and get an offer for a bridging loan. You fill out some simple application forms, and then they assess it within a few hours. Yep, your credit. We've looked at your credit profile, and you know we're good to go. So you then pay for a valuation. So the valuer is instructed for lending purposes to look at the project that you're buying, whether or not you're buying it at a realistic value, and then what they will want to see is that actually in she's going to be doing some works, and it's in and the works of say £50,000 are going to create a property that's worth £250 or 250,000.
Mm-hmm.
So a lender always wants to know whether or not they're going to be able the money, they're going to get their money back. So
yeah,
you're going to exit out of the loan.
So they always work out the end value anyway to decide whether it's worth to lend you the money, because they want to be reassured that it's worth lending it to you. But are there products that will go from a bridge straight into a mortgage rather than you having to refinance at the end of the bridge? Am I making sense?
Yeah, so you've always got to refinance onto a product. So there is a bridge to let product that's out there. But that's not always like bulletproof, because bridging's predominantly about speed and helping you access that by that asset. They would look at it to say, oh, you know, in 12 months' time, it's going to be X, Y, and Z, and you know that you could switch onto a product within that same organisation just to save you some extra costs that you would incur, but it would still need to be underwritten. So, you know, the surveyor would have to go back out and have a look at that property.
Okay,
So
it's never set in stone.
it's not never set in stone, really. You've got the option to refinance onto that longer term mortgage. But sometimes the customer might think, well, actually, that interest rate I could get elsewhere. And as I'm going to be on a long-term rate, it's worth my while to pay for another lender's fee and legal costs.
Okay. I think the thing that scares me about bridging is because it's just, it's extra money that you've got to borrow. But of course you've got to pay to borrow other people's money. That's, you're buying the right to borrow it, aren't you? That's what you're paying out the interest for. I guess, but when you take out a bridge at the beginning, when somebody comes to speak to you, they'll tell you what they want to borrow, and I'm guessing you can say, well, this is exactly how much it's going to cost you in interest, right? So you'd know that from the beginning.
Yes.
Yeah. And um isn't there a difference between, sometimes you could pay a bridge like monthly and sometimes you can roll up the costs or something like that? Do you want to explain that a little bit?
Yep. So you can take a bridging loan out. So typically, if we just do a very simple example, 100,000, the property's worth 100,000. The lender on a residential will lend up to 75% typically, and that includes interest payment, and other associated fees like an admin fee, um, and the interest over the term. So if you're adding interest over a whole 12 months and you're retaining the interest, what you're doing is saying to the lender, well, I will pay you back my loan plus all of the interest over 12 months. Um, so because the interest is all retained at the beginning, you're going to net less money at the beginning because of all of the interest. So serviced interest is not really used that commonly because you're taking advantage of the fact that you don't have to be paying any interest payment. But say, for example, the client wants as much as they possibly can on day one, then they might say, well, actually, I can afford to service it because at the moment, I really need as much money as I possibly can on day one, because the lender will lend you up to 75%, plus there'll be some an arrangement fee, and then that will give you the net amount available. So we can put an example maybe by the video of how that works, so that they've got something to refer, because I think just explaining it without having the figures becomes a little bit like I'm just chucking out numbers.
Yeah, I think that is the scary thing, because until you have the actual numbers for a deal, it's all quite hypothetical. And so I think that's the scary bit. But I guess that's why when people work with you, that's when you get the actual figures and you can give them a reality check of what is possible and what isn't possible, right?
Yeah, yes. Well, so what I would do is I would always try to get them the best offer to suit their circumstances. So you can, just to confuse matters, you could have a loan over 6 months, but say like all of the interest has been used, so they're going to net a less amount than if they serviced it. But what you can do is you can manipulate it, and you can say, right, well, we'll do 3 months serviced, and then we'll do 3 months we'll do 3 months retained, and then we'll do 3 months serviced. So say, for example, a client might say, well, I reckon I could refinance that in 3 months' time. So what they've done is they've taken advantage of netting even more money on day one, and their service stability won't kick in until month 4. So they just have
a
to
little bit there, Alice. What does
pardon?
what does this, you're losing me a little bit. What does the serviced, what did you say?
Oh,
Serviced?
service means you're servicing the loan, so you're paying the interest. So retained is all of the interest is retained and kept, and then you pay that at the end.
Yeah.
Service is you're servicing the loan.
That means you pay it over time. You're paying the interest monthly.
Yes.
Yeah.
Yeah.
Thank you. I think this is the bit that scares me. I don't know if it bothers other people, because obviously every industry has their own terminology, which to them, it just makes sense. But then when other people need to use that service, they'll be listening. And I was nodding along. I was like, I need to ask you because I don't know what that bit means. So thank you for explaining.
That's fine.
Cool. So you are doing something quite specific with your business, which is quite niche. I don't know how much you want to say about it, because that's kind of, you need people to talk to you to find out more. So do you want to say anything more about it, or a little sneak into it, or anything at all? You can say no.
Well, what is it that you think? What you? I think you know what you mean. So you can. Do you want to explain what
So
from
what I'm saying
your
is,
perspective?
so a lot of the time when I see people in the property world, they'll be offering out their services, and I find people talking about the £100,000 houses, which you just gave some examples of there when we were talking about figures, but that was just to make it simple. But you actually work looking at much bigger numbers, don't you?
Yes,
And
I do.
that's quite unique to you from what I've seen in all the groups and stuff. So yeah, I was just wondering, like, who is your ideal client?
Well, I have I have a couple of ideal clients. So I'm really interested in helping people to begin their property journey, and begin their business and be super focused and niche in what they're doing. And that is just through my own experience of how you really define and really get yourself out there with regards to your brand, your why, um, and being able to help people that are starting on their journey is important for me, because I think that there's so many strategies out there that you can learn, that you really need to pick on just one particular thing over 3 to 6 months and see how it works,
Mm.
but also to earn some money from it. Like, it's a business, and there's only so much learning that you can do, and eventually what will happen is that you will realize that you'll be joining these groups and you already have it all inside you, and what happens is you don't take the action because you're like really overwhelmed with so many ideas. So that's one of my my ideal client. The other ideal client would be the property professional that has been in the business, got experience for say 15 years, has got their skill set, and built maybe their own portfolio, got a few properties, maybe a managing director of a home building company, a surveyor, and really help them to um, get them into property, help them access the finance that's available. Really, my one of my goals is that I believe that you could achieve, if you're very scheduled and you've got the right team around you, you could use 50,000 to create a property development. Maybe, well, what I'm trying to say is, I believe that if you're structured and you're really focused in how you're going to invest your money and the types of projects that you invest it in, I believe that you could make 1 million in 3 years by, you know, even, well, one of my clients bought a scheme. It was worth 1 million. Has had construction development finance for 650,000, and he is set to earn himself about 900,000 once he sells the properties. So that's over 18 months. Mm-hmm. So if you just think about those figures, like he's earning that, all you need to do is just find one other scheme, and then you've got a great business. So that's that. They're my ideal clients, people that are property professionals, and they've got the cash to invest, and they've got the skills. Because I think,
sorry, go on.
I think so. We can go into employment, and we can work for 15 years of our lives, maybe not see our children or take our children to school, and basically just be helping big organisations to become even bigger organisations. And there's just not that flexibility to be able to take your children to and from school, make your own business, and actually reap some profits for yourself. So I think it's just the natural next step. But for people that want to take that risk, it's not an easy jump, as you probably you know yourself. You know, you're heading into your journey and doing that while working.
Yeah.
Because
so yeah, I work full time. I mean, even today, I got home and I was like, right, I've got to quickly cook dinner. I've got to wash up. I've got to clean the house before I get on the call to you. And then I've got 2 more calls after as well. So it is really hard to fit everything in. And it would be nice if I didn't have to do the day job every day. I like going to work. I like to be busy, but it would be nice to pick and choose a little bit what that day looked like. I just wanted to go back to what you said about the first type of client, like helping new people. So I feel like for me, like you're really helpful. You're always messaging me like, oh, how are you doing? What's going on now? What's going on this week? Have you done this? Have you done that? And I don't normally follow through with everything you tell me to do, but it's nice. It's nice to have somebody saying, oh, why don't you try this? Why don't you try that? Because the industry can feel very lonely, especially when you first start out, which is why I put together my own Facebook group, Heading for Property Success, which obviously you're part of. And you've been to both my networking events as well. So thank you. And I just feel like it's really important to bring people together to share what they're doing so that we can all learn that a little bit faster, because and that's what you've already done for me before I set that up. So I really appreciate your time, because people don't realize to bother to think about somebody, to take the time to message them. Yes, it only takes a couple of minutes to send a message, but it means a lot when people actually bother to do that, because a lot of people don't bother to do that. So thank you, Alice. I really appreciate that about you.
that's all right. And I'm seeing some really, I mean, you've referred me some clients that are interested in bridging loans, but also it's really nice to see your marketing now. I saw one of your posts really specific now towards with the children.
Yeah, I posted that today. So do you know what? I already have an investor brochure, which I made probably a year ago. And then every couple of months I see somebody say, oh, you should do an investor brochure. So then I update it and I make it look good. And it just sits there in Canva. I don't send it out. I don't know why. It's so nerve-wracking. Like doing a live video, I'll do that. But putting a bit of material that's got text in it, because, you know, I'm dyslexic, I get so worried it will have an error and then people make a big deal about the error and they forget all about the message, and then I get upset. So I'm trying to be a bit bolder, and yes, I am. That niche thing we're talking about, being quite specific.
Yeah.
These are the people I want to help, and I'm still on that journey of working out how I'm actually going to do this.
Yeah.
But I can't do it on my own. So you are one of the people helping my journey. You are actually in my brochure. So it says that you are the broker to use. I've also got Tyrone in there as the construction company. So, and as many people as I can get on board, because like I said, also when we get a client or we get a house that we're going to purchase, if I'm like, yeah, it's not just me, I've got a team. I feel professional.
Yeah.
um, so yeah, no, thank you for saying about the material, because I was so nervous to post that this morning, actually.
Really? Well, I tell you what, to get away from your nerves is the sequence. So if you could get people to sign up to your landing page, then you could send out your investor brochure, and you won't know that because it's going on in the background. So you you just take yourself away from that nerves, and you've got a system in place.
I think
So
I know, and I know you're always telling me about. I do need to do that. I hate Mailchimp. I hate the way it looks, and I worry that the automatic bit doesn't work. And I hate automatic things when they get sent. I hate it when I get an email which is blatantly the email that's been sent to a million people, but it says "Hi Shona" as if it's to me, and it's like, no, I know how coding works. Like, it just really annoys me. So I don't want to become that person. But I get what you're saying. I do need to do it. I just feel like it goes against my values a little bit, and I don't know.
yeah, but don't it doesn't go against and I've been in this place. It doesn't go against your values. You sending out material that somebody's shown an interest in, it goes against your values when the content that's being sent or yeah, where the content's being sent is just irrelevant and just too salesy, or you don't find that person or that company that's sending you, you don't connect with them, so you either unsubscribe, which is fine, or you just carry on letting them send the drivel. But the most important thing is that person has asked for that piece of information. So um and if you know your database and you've spoken to them, which you like to speak to everybody, don't you, in your group?
I try my best, yeah.
So
Yeah.
when your content's going out, it's not going to annoy somebody because they like you, they're buying into your messaging. So it's a system that works with your values, and you probably just have a view of some marketing material that comes into your email box as trash. So
Yeah.
you associate that someone else is going to think that of yours.
Yeah, that is what it is. I try and see myself as the other side. How will I feel when I receive it? But I guess if it said, oh, who would like to see an example of a um investor brochure, and then if they sign up, then they're choosing to have it, right? If I'm just honest, I think as well it's hard in a lot of the groups. You're not even allowed to kind of market yourself, which I find crazy, because I'm like, well, what's the point of the group then if you can't tell people what you're doing to try and work with people? So in my group, it's not like that. You can post things. I might change my mind if somebody was like posting an advert every 2 hours, but they
Yeah.
don't. I'm the person that posts in my group the most. I look so vain when I look back through it. I'm like, it's just me, me, me. um, but yeah, I can post it in my group to people. That's cool. Yeah.
Yeah, I suppose you might get a little bit upset with if somebody was putting their property deals in your group.
I don't know
Maybe
if I would. I would if they were like putting deals in there like every day, but then I don't know. We'll wait and see if it happens. Nobody
Well,
puts anything in there, so
I think I might have put something in there, but you said that I could. So
yeah, you did. And also sometimes I see your stuff in other places and then I'll share it to my page as well, because I just think, oh, my people must be so bored of me. It's for sharing, but that's why I introduced the networking event, because that's when we really do get to talk to each other. I feel like that's really beneficial.
yeah, it was really good, that meeting last week. It was really good.
Thank you.
So um so I think what with regards to bridging, like people can feel a little bit scared, or say to me, oh, well, what's the rate, what's the rate?
Yeah.
It's not necessarily about the rate. Of course, I know, there's a difference between maybe a few thousand in your business, but actually it's about doing the deal. So if the interest rate is say, for example, you want to access a loan, and it's going to cost you 20,000 to access that loan, and you can get on with your project within 4 weeks, or it's going to cost you 10,000, and it's going to take you 6 months to actually access that project. Then you have to outweigh, if I get on with this project now, I pay £20,000 at the end to do this project. In 6 months' time, I can sell that, but rather than wait a long time to get your funds. And all sorts of things can go wrong with property. You could get people pull out on you. You could get a higher bid, and then you could lose that dream project that you're looking at. So I think people do get a little bit scared about the interest, and really, really hone down on the interest. And it's not really about the interest; it's about doing the deal. Obviously, if it's 2% per month, then maybe you'd think that it's going to be a bit expensive. But for example, a client might do have an option agreement in place. So they might have an option agreement in place. Say they've got an agreement of 100,000. They're gonna it's worth 220,000. They've had this option agreement for a good few years, and now they need the option agreement to go be put into place and buy that property, because they've been living in it for a while. Now it could be that you've only got a few options, and the interest rate might be a bit expensive, but you've got no other option but to either find that money or borrow that money. So um, that could be one of the scary things. And having a loan and maybe a personal guarantee can seem a little bit scary as well. But you just have to factor in. You have to make sure that your deal stacks up with your numbers. That use the resources that you've got to see if the deal stacks up, and just do your numbers. Make sure that that property is going to be worth that at the end. And yes, it would be good to sell it, but worst case scenario, if you have to then refinance that, then what's the worst that could happen if you don't factor in sort of the worst case scenarios?
So in order to do the worst case scenario, what percentage do you think people should put into their budgeting calculators to work out, okay, then yeah, this is how much it's going to cost?
How much it's going to cost? What, for a purchase?
Yeah,
Or
so for example, if I'm buying a house, say for 200,000, but it's going to be worth 300,000, and the refurb's going to be about 50, so we're going to have to put 250 in, but it'll be worth 300. Sorry, take off the how much we're going to pay for it. It's going to be
yeah,
worth 300. We
yeah.
deduct how much the refurb is, so we deduct the 50. Then we would deduct the stamp duty, deduct the legals. How much should we also deduct to make sure we could afford the borrowing costs, so we know how much to offer?
Yeah, so you do the 1%, don't you? 1% borrowing as a rough rule of thumb,
It's one
which
percent a month that I do it on. Yeah, is that realistic? I don't know.
I think that's really good, because what you should always do is you should always work out your cost worst case scenario. So 1%, if you have got clean credit, you've got income, and you've got proof of an exit, then you're looking at, say, 0.85 at the moment. So if you then calculate your deal using 1%, when you then go to proceed with your loan, you're shaving off costs, aren't you? So you're going to shave off some costs, get it down to, say, 0.85, 0.89, but you've already factored in 1%. Great, that's one tick off the list. You've made a reduction, and you're always looking to make further reductions. So when you do your refurb, you're going to add in 10% contingency, aren't you?
Yes.
Um, and so
There, yeah.
and so once you know that you've got that deal, then you've got room to negotiate, haven't you, with maybe a builder. I'm going to pay a fixed cost on that, or you go out and you do your own little, you find different handymen to do the job that they need to do. Say, for example, a new boiler, you can either have a package with them, or you can say, right, well, I've actually found a boiler. It's a decent boiler, say a Valiant maybe, and it's £650, Mr. Plumber, and I'm looking to pay you a day rate to fix that. But in your costs, you've probably factored in £2,000 or £3,000. You can just shave off costs throughout the process.
Yeah. Alice, I'm really sorry, but I am going to have to finish up in a moment. I did want to carry on with you though, because I had a very specific question. So I might have to call you back tomorrow to talk about that one. But it was to do with a builder, and to do with them putting up money up front for the refurb cost, because that could count as the money that we put in the deal, because when you do a bridge you have to show that you've got some money in the game. So or maybe we could make another video another time where we could talk through that kind of scenario. That would be great.
Yeah, well, I'm happy to do that. And then if people have got other questions, we could maybe create something around other questions. We can go through some case studies.
Nice. Yes, that would be great. Yes, Alice, I love your brain. You just think. I know what we will do. And even if I forget, you will message me and tell me this is what we need to do. All right, cool. I've got another call I need to do in 1 minute time. It was lovely to see you. I really appreciate your time and you sharing this knowledge with the world. Very brave, Alice, very brave.
You're a very nice interviewee.
Oh, thank you. I even wore my smart jacket. Well, it was for work. I went to work today, but yeah. Cool. All right then. Have a lovely evening.
You too. Thanks a lot.
Bye.
Bye.